Silver just threw us a curveball, and I'm hoping that I will be able to make some sense of what's going on with the strange activity in silver's price. Let's talk about it as we explore. There has been a lot that has gone on with silver's price this year. In fact, if you started stacking at the beginning of 2025, you are a very happy camper. But nonetheless, there is some words of caution I want to give to you about that, and part of that has to do with what I'm going to be talking about today, and that is the dramatic increase in the spread in silver's price. I'm going to explain what this means, because there's actually 3 different prices of silver if you're buying it, and there's 4 different prices of silver when you take into account selling your silver. We're going to talk about all of that here in this video, and we're also going to discuss a little bit about where silver has been in the past and where it can go in the future as well. So let's get into what's going on here. What is this spread I'm talking about? Well, the spread in silver's price has to do with the difference between the bid price and the ask price. And you might be wondering, well, what is bid price and what is ask price? Well, ask price is the number that is reported on major exchanges, usually TradingView and other places that measure the price of silver from which silver is bought in trading. In other words, if you're buying an ETF or some derivative version of silver, you're going to be buying based off of that ask price. And that also includes physical silver as well. In theory, that is what you want to do, is you want to be able to buy based off of the ask price. However, there's a combination of futures prices and the ask price that you can also buy from, which is why many bullion dealers show a different price. Sometimes it's higher, in most of the cases. Sometimes it's a little bit lower, but not very often. My friends at Summit Metals, they know this. Of course, they have prices that are closer to the bid price or closer to the ask price than most other dealers out there. But they also have great customer service and excellent shipping times. So check them out at summitmetals.com. So the ask price is essentially one of the most important prices that you will have and that you will reference whenever you're going to buy your silver. But what about this bid price? Well, the bid price can also be known as melt price. Typically, that is what the price is when you go to sell your silver back and to a dealer or a refiner, because you're bidding on it on the way back to the agency from which it will either be refined or melted down, resold into industry, and the like. But typically, dealers will quote you based off of the bid price. And right now, since there's a glut of silver in the market, well, that bid price is going to dramatically change. In other words, you're going to see it a number that is referencing that back of spot, back of bid price. In other words, maybe $2 to $3 below spot nowadays, sometimes even more because they have so much silver on hand. And Dean R. pointed out to me this great anomaly between the bid and ask price that we saw when the markets closed after a dramatic move to the upside that we saw after Jerome Powell's speech. And there's a reason why that has occurred. So what is this dramatic spread between these two? Well, for most of 2025, it has been around 12 cents between bid and ask price. In a normal silver market, it is about a dime's worth of difference between the two. But it has increased to 12 cents because of the volatility of silver's price. And that is the key reason why we're seeing it. Well, that volatility has increased now. And now we're up 19 cents between bid and ask price. Now, if you want to talk about volatility, well, usually you see that in the platinum group metals where the spreads are even larger, like hundreds of dollars, such as the case with rhodium's bid and ask price. Very, very high margins between the two. And the spread is very, very wide between the two. But there's other reasons why this is occurring as well, too. We see that spread between bid and ask price for silver. It widens due to the combination of several market factors, including increased volatility, decreased market liquidity, and potential supply-demand imbalances. And we did see that happen back during in 2020 during the Black Swan event there. And when the market experiences higher price fluctuations, market makers widen their spread to compensate for the increased risk of losing money on trades. Lower trading volumes and fewer ready buyers and sellers reduce market liquidity, making it harder to match trades quickly and efficiently, thus leading to a wider spread. So when we talk about market volatility, we know that silver prices can be very volatile, much more volatile than gold prices, for instance, and that spread between those two is really much less, but they've widened a bit too. It's about $3 right now between the bid and ask for gold. Usually it's about $1. But the reduced liquidity is when a wider spread indicates lower liquidity in the market. It occurs when there is less active trading, fewer buyers and sellers, or a general lack of confidence in the market. With less liquidity, it's harder to find a counterparty for a trade at a fair price, leading market makers to adjust their bids and offers to reflect this difficulty, resulting in a wider spread, according to Investopedia. And also, you can probably make an argument that this is what's going on now with the situation with what Jerome Powell has been saying, that we're going to be preparing for a rate cut for interest rates, and that is some of the market stress that could come into play here. Wide spreads can also signal broader market stress or uncertainty. In such environments, investors and traders tend to pull back from riskier assets, leading to lower trading volumes and wider spreads as market makers become more cautious. And then the other thing we have to take into account here, and I think that's less so of a factor in the market here that we've been seeing in the last day or so, is dealer behavior. But I think it is something we need to pay attention to, because we know that it is part of the issue here and part of the overall silver market, which is fairly complex, more complex than what people think. In fact, we know that the silver market is tiny overall, but it's got a large market cap. But wide spreads can also signal broader market stress or uncertainty. And we also see that market makers are not in the business of supporting a falling market. Instead, they are there to provide liquidity and profit from the spread. And during falling markets, their bids and offers become less aggressive, lower bids and higher offers, which directly contributes to a wider spread. And one can make in a sense that this plays a very big role, especially when you take into account the inventory that dealers may have. When a dealer has excess inventory in a falling market, they may narrow spreads to encourage turnover and sell off stock. Conversely, in a rising market where inventory is depleted, spreads might widen to slow sales when they rebuild their stock. I would say it's the exact opposite of that now. As the price goes up, people are liquidating and selling to dealers, and they have a glut of it. So in a sense, I think in this unusual market that we find ourselves in here in 2025, and that is what is occurring, and you're seeing that play somewhat of a role in terms of the spread widening, and dealers need to make money, and so they buy back of a lower bid price than normal. In this case, it's about 6 cents, 6-7 cents right now. So it'll be very interesting to see when the markets open up. I do a market watch every Sunday night, and that'll be tonight for those of you watching this video today. Every Sunday night at 6 p.m. Eastern Time, we watch the Asian markets, and we're going to track what the spread is going to be doing there and see if it narrows back down after sort of a market shock that we saw on Friday. It'd be very interesting to see if it does come back into line. And back in line means 12 cents difference between the two. And that's become the new normal now. So we'll see here how that plays out. But when we see what that means, usually it's higher trading cost, and that means that typically we're going to pay a little bit more than normal. Spot price from dealers may fluctuate. We've seen that all over the place. I don't think any dealer has been affected been able to really report totally, truly accurate pricing. It floats around between these different markets, the futures and the spot market and the like. But we also know that it is an indicator of market conditions. The widening spread can provide valuable insights into market sentiment under underlying conditions. It may suggest increased risk, lower efficiency, and a general cooling of the activity in the silver market. And that very well may be the case. For those of you, again, who have been stacking since 2025, you've enjoyed something we've not seen in a long time. That is silver outperforming inflation. And that is not the normal for the silver market. In fact, the normal for the silver market is wealth preservation at the very least, or really at the most. Rather, really when you think about it, over the long course of time, it's there to preserve your wealth. But nonetheless, there are times when we've seen a dry spell in the silver's price where it's been hanging out, at a certain trading range for a long, long time, essentially working itself out of preserving your wealth. And we've seen that happen in the past. In fact, the last decade we saw that for a long time, where it really was not preserving your wealth for a great period of time. But in the long run, you hold it long enough and you practice dollar cost averaging, then it will, and it has. Notwithstanding, for those of you who have been stacking just this year or have been enjoying these high prices for silver and this move to the upside, be prepared. We could see it pull back. We could see it pull back dramatic enough that it may discourage you. Do not be discouraged, even if the price goes below $30 an ounce, which I don't think it will in the medium term. And we may see it pull back in the short term here, once we settle in from what the Federal Reserve is going to do. But I don't think we're going to see it pull back a whole lot. But be prepared, just in case, for a pretty dramatic pullback in the price of silver. It does not change the fundamentals for what silver has been for thousands of years, and that is a store of wealth, and that is a wealth that is outside of the system because of what it is and how it has existed for thousands of years. Its historic value is really the biggest selling point that silver has. It's a remarkable metal. The only difference between silver now and silver 1,000 years ago is that it's got a lot more uses now in industry, science, and technology. Well over 10,000 use cases. Silver evolves with time in terms of its use and in terms of its value to society. But one thing is for sure, for those of us who hold the physical, we know that it is a store of wealth. We know that it is a savings vehicle outside of the system, and that is an amazing thing. And so I hope you enjoyed this video and found it informative. I'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.